Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. You can find the link to the website in the description below. The US benchmark Henry Hub daily natural gas is averaging around $1.50 per million British thermal units, or MMBTU for short, the lowest price in inflation-adjusted dollars since 1997. The low prices are a result of high natural gas production, low natural gas usage, and higher natural gas inventories. In fact, natural gas inventories are up roughly 12% above their year-ago average and approximately 22% above the 5-year average. This may be bad news for upstream natural gas companies, but not so bad news for midstream stocks like Western Midstream Partners LP, traded on New York Stock Exchange under symbol WES. And why is that? As a midstream company, Western Midstream's customers have to pay for the privilege of using their infrastructure regardless of what natural gas prices are. John?
Yeah, thanks, Mo. Western Midstream Partners LP is involved in gathering, compression, treating, processing, and transporting natural gas. It gathers, stabilizes, and transports condensed natural gas liquids, or NGLs, and crude oil, and gathers and disposes of produced water. It also buys and sells natural gas, NGLs, and condensate. Its core assets provide midstream services for customers in two of the most active and productive basins in the U.S., the Delaware Basin in West Texas and New Mexico, and the DJ Basin in northeastern Colorado. Now, broadly, the company's infrastructure includes 75 processing and treating facilities, 7 natural gas pipelines, and more than 16,000 pipeline miles. While energy prices can be volatile, 95% of its contracts are fee-based, and 100% of its liquid contracts are fee-based. This provides with direct commodity exposure protection. The partnership is owned 49.8% by energy giant Occidental Petroleum Corp., the majority at 50.1% held by public unit holders.
John, speaking of Occidental, there are rumors on the street that Occidental could be looking to offload Western Midstream.
Yeah, according to some sources, Occidental is looking at selling Western Midstream Partners. This would help Occidental, which is owned in large part by Warren Buffett's Berkshire Hathaway, to reduce the $18.5 billion debt it has accumulated as a result of acquisitions. Back in December, Occidental announced a deal to acquire Crown Rock, an oil and gas producer, for $12 billion. The big spend comes just 4 years after it acquired Anadarko Petroleum for $54 billion. Western Midstream was actually formed by Anadarko in 2007, but Berkshire set it up as a standalone company when it bought the company in 2019. Now, with the 49% stake, Occidental is not the majority owner of Western Midstream, but it also happens to own the general partner, which gives it full control of operations. Now, the sale of a cash cow like Western Midstream will certainly attract many potential suitors, and that could include Enterprise Product Partners, Kinder Morgan, and Williams companies. For its part, Western Midstream has confirmed that it is aware of Occidental's interest in selling assets to lower debt, but added it has not started a sale process.
These rumors have helped send WES stock to its highest level since 2017.
Yeah, management at Western might say they have not started a sales process or engaged bankers or other advisors, but investors still think there's something sales rumors. Since February 13th, WES stock has rallied an impressive 25%, at least of this recording, hitting a new 52-week high of $35.04 per share on February 28th. Now, this puts it just a little below its July 2018 record high of $38.03 per share. And again, as of this recording, WES stock is up approximately 30% over the last 6 months, 17% year to date, and 41% year over year.
There's a reason to believe Western Midstream is on the radar of other energy giants. And again, it makes a ton of money. In 2023, it reported full-year net income of $998.5 million and adjusted EBITDA of $2.06 billion, which exceeds the previous revised full-year adjusted EBITDA guidance range. Full-year cash flows from operating activities was around $1.66 billion, while full-year cash flow was $964.2 million.
Yeah, and there's also been a raft of deals in the pipeline sector over the last number of quarters. Last year, 1OK Inc. acquired Magellan Midstream for $18.8 billion. Energy Transfer bought Crestwood Equity Partners for $7.1 billion. And to kick off the 2024 in January, Sunoco announced plans to acquire New Star Energy for $7.3 billion.
And John, despite the sale distraction, income investors should be reminded that this company recently hiked its distribution by 15%.
Yeah, while investors wait to see if a sale actually takes place, they can fully take solace in knowing that Western Midstream is reporting strong financial results and continues to provide a reliable high-yield dividend. In February, the partnership's board announced a quarterly base distribution of 0.5750 per unit, consistent with the previous quarter and up 15% over the 50 cents per share paid out in the fourth quarter of 2023. This works out to an annual distribution of $2.30 per unit for a current yield of 6.76%, and that's more than double the current inflation rate of 3.09%.
Just for our viewers, what is base distribution?
What's the minimum amount share unit holders will take home each quarter? Its current annualized base distribution target is $2 per unit. That also means that the company will pay out enhanced distributions from time to time as well. For example, in April 2023, it announced a base distribution of 50 cents per unit and enhanced distribution of 35.6 cents per unit. The company said in its recent investor presentation, though, that its base distribution in 2024 will increase to $3.20 per unit.
John, thank you so much for your insights. With or without a pending sale, Western Midstream Partners LP continues to be a great energy company. Natural gas prices may be down, but Western Midstream has a direct commodity exposure protection through its fee-based gas and liquid contracts. It's expanding its operations to meet demand and continues to raise its base distribution. After a strong 2023, it provided equally impressive year-over-year guidance for 2024, which includes adjusted EBITDA growth of 11%, free cash flow growth of around 19%, and a base distribution increasing to $3.20. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.